Hey everyone, welcome back to Corporate Decoder, the place where we make sense of complicated corporate filings so you don't have to. And today we have a jam-packed report from Entergy Corporation. And a few of its subsidiaries, specifically, we're diving deep into their quarterly report for the period ending June 30, 2025. And oh boy, do we have some numbers to unpack, from how much money they made to where they're planning to spend it all and what kind of financial tightropes they're walking. Trust me, this filing tells a story and we're about to decode it. Before we dive in, if you appreciate getting straight insights from corporate documents without all the fluff, make sure you're subscribed and hit that notification bell so you don't miss our future breakdowns. Also, we have a fantastic community in our Discord channel linked in the description below where we break down these reports together, so definitely check that out. Now, boy, do we have some numbers to unpack from. How much money they made to where they're planning to spend it all and what kind of financial tightropes they're walking. Trust me, this filing tells a story, and we have a fantastic community in our Discord channel linked in the description below where we break. First off, let's get a handle on who exactly is filing this report. We've got Entergy Corporation itself, along with its key subsidiaries like Entergy Arkansas, Entergy Louisiana, Entergy Mississippi, Entergy New Orleans, Entergy Texas, and System Energy Resources. This is a combined report, meaning all these companies are singing from the same song sheet, or at least presenting their financial solos in one big performance. Now let's talk about the heartbeat of any big company, its stock. Entergy Corporation has a massive number of shares out there, specifically over 446 million shares of common stock outstanding as of June 2025. That's a lot of ownership stakes in this energy giant. Alright, let's get into the meat of it, the management's discussion and analysis. This is where the company tells us in its own words how it performed and what's driving its numbers. The key thing to remember is that Entergy primarily operates in one main segment, the utility segment. This segment covers everything from generating electricity to transmitting it all the way to your homes and businesses in Arkansas, Mississippi, Texas, and Louisiana. They even have a small natural gas business in Louisiana. They even have a SEPI to transmitting it all the way to your homes and businesses in Arkansas, Mississippi, Texas, and Louisiana. They even have a small natural gas business in Louisiana. They even have a small natural gas business in Louisiana. But hold on, that's changing hands, soon as we'll discuss later. Now onto the real juicy stuff, the financial comparison between the second quarter of 2025 and the same period in 2024. The company reports a significant increase in net income attributable to Entergy Corporation, going from a mere $48.9 million in the second quarter of 2025. That's a massive jump driven by several factors. Per ending 25, that's a massive jump driven by several factors. Let's look at the top line. Operating revenues for the utility segment saw a substantial increase from $2.94 billion in 2024 to $3.32 billion in 2025. This is broken down into a few parts. Fuel rider and other revenues that don't really change the bottom line saw an increase of about $297 million. The company highlights that their earnings are generally protected because they can pass fuel and power costs onto customers. So while revenues go up and down, the impact on net income from these specific costs is usually offset by the revenue changes. $1 million in usage or volume and weather changes added another $18 million. The company highlights that their earnings are generally protected because they can pass fuel and power costs onto customers. So while revenues go up and down, the impact on net income from these specific costs is usually offset by the revenue changes. Digging into the specifics of energy sales for the second quarter, we see residential sales actually dropped by 7%, while commercial sales stayed pretty much the same. But industrial sales saw a very impressive 12% jump. This industrial growth is good news, suggesting strong economic activity in their service areas and a higher demand for their services. Now for some of the cost, operation and maintenance expenses saw an increase mainly due to higher storm damage provisions, more vegetation maintenance, and increased non-nuclear power generation expenses because of more work done during plant outages. This makes sense as they invest in keeping their infrastructure up to par and dealing with weather-related issues. Interest expense also went up by about $35.5 million for the utility segment compared to last year. This is largely due to Entergy Louisiana and Entergy Mississippi issuing new bonds in late 2024 and totaling billions in new debt that they're now paying interest on. Looking at the parent and other portion of the business, which includes corporate activities and eliminations, we see a significant shift from a big loss in the second quarter of 2024 of nearly $400 million to a loss of just over $130 million in the second quarter of 2025. This improvement is partly due to a large settlement charge in 2024 related to pension liabilities that didn't repeat in 2025. When we zoom out and look at the first half of the year, the story is similar, but even more pronounced. Net income attributable to Entergy Corporation soared from just 2024 to a staggering $28.6 million in the same period for 2025. This nearly sevenfold increase is substantial. Overall, operating revenues for the utility segment jumped by about $431 million for the first half of the year, driven by increases in retail electric prices and a notable surge in industrial sales, which went up 11%. A big factor in the improved 6-month results is a significant decrease in other regulatory charges. These went from over $234 million in charges in the first half of 2024 to credits of $72 million in 2025. This swing of over $300 million is a huge positive for their earnings and is linked to some past regulatory agreements we've seen mentioned in their filings. Another major difference is the asset write-offs. In the first 6 months of 2024, Entergy booked a charge of $131.7 million related to writing off a regulatory asset following an unfavorable ruling in an opportunity sales proceeding. That charge didn't happen this year, so it naturally boosts the current year's results. Unsurprisingly, interest expense is up significantly for the first 6 months, reflecting all those new bond issuances we mentioned earlier, almost $90.5 million in interest expense for the utility segment in the first half of 2025 compared to about $58 million in 2024, a roughly 50% increase. Now, for some exciting policy news, the filing mentions the enactment of the One Big Beautiful Bill Act on July 4, 2025. This act is a big deal for clean energy. It extends tax credits for nuclear facilities through 2030 fast. This could push companies to build these faster or miss out on incentives. In today's video, carbon emission goals, Vixen Tamione for solar and wind projects to claim these benefits. This could push companies to build these faster or miss out on incentives. Entergy notes that some of these changes could impact their plans for solar and battery projects and potentially their carbon emission goals. Let's look at the company's financial health, specifically its debt levels. Entergy's debt to capital ratio as of the end of June 2025 stands at 64.9%, which is a slight improvement from 65.3% at the end of 2024 when you exclude securitization bonds, which are essentially non-recourse debt. The ratio is even lower at 64.7%, and when you subtract cash on hand, the net debt to net capital ratio is 63.8%. These numbers suggest Entergy is using a fair amount of debt to finance its operations and investments, which is pretty common for utility companies, but it's something we always keep an eye on. Good news on the liquidity front, Entergy Corporation has a massive $3 billion credit facility that expires in June 2025. They haven't borrowed anything against it, meaning they have almost $3 billion of capacity available. This means they have plenty of flexibility to manage their short-term financial needs. They also have a $2 billion commercial paper program, and as of June 2025, they had $459 million of commercial paper outstanding, meaning they are using this program moderately to manage their finances. Entergy is actively managing its equity structure. They conducted a significant equity offering in March 2025, selling 17.8 million shares, but instead of issuing them right away, they entered into forward sale agreements. This means they've agreed to sell the shares later at a price that's adjusted daily by market conditions. Now let's talk about where the money is going. The capital spending plans are huge, with investments in generation, transmission and distribution planned for the next few years. Planned construction and capital investments are set to be around $8.2 billion in 2025 alone, and jump significantly in 2026 and 2027 to over $11 billion each of those years. A big chunk of this is going into generation projects like new solar facilities and advanced power stations to meet growing demand and modernize their infrastructure. Looking at the combined company totals for operating revenues, we see a healthy increase from $29 billion in the second quarter of 2024 to $3 billion in the second quarter of 2025. And for the first 6 months, revenue grew from $5.7 billion to $6.1 billion. This growth is good news, showing increased demand and prices for their services. Now let's dive into the individual companies within the Entergy Arkansas. Saw its net income increase substantially in the second quarter of 2025, mainly due to higher sales and prices, a good sign for their operations. However, they also saw increases in operation and maintenance expenses and interest expenses, which are common as a company invests in its infrastructure and takes on new projects. Entergy Arkansas specifically saw an increase in industrial sales by 25% year over year, which is quite strong and shows a growing industrial sector in their service territory. Residential sales, however, were down 10%, likely due to weather or customer shifts. Entergy Louisiana had a massive boost in net income for the second quarter of 2025, an increase of 108 year. or 69RX plan renewal that didn't happen this year. If you want tent happen this year, Petty were to do a formula rate plan renewal that didn't happen this year. Their operating revenues also increased, driven by higher retail electric prices, which is a crucial factor for utilities as it directly impacts their top line revenue. Looking at sales for Entergy Louisiana, industrial sales were up 9%, which is a positive sign, although residential sales saw an 8% dip. Entergy Mississippi saw a more modest increase in net income of $4.7 million in the second quarter of 2025, driven by higher prices and other income, but faced increased expenses in operations and interest, an ongoing theme across the board. Their operating revenues saw a healthy increase of $14.1 million in the second quarter, mainly due to that higher retail electric price that we're seeing across the board. Entergy Mississippi sales figures show a slight dip in residential and governmental sales, but a strong 8% increase in industrial sales and a significant 78% jump in sales for resale to non-associated companies, which is a very positive sign for their wholesale business. Entergy New Orleans is showing a decrease in net income by $3.1 million, mainly due to higher operating and maintenance costs and interest expense. For the first half of the year, Entergy New Orleans had positive net income in 2025 compared to a net loss in 2024, mostly because of a large regulatory charge from 2024 related to an IRS audit settlement that didn't occur this year. Their energy sales show a slight decrease in total retail sales by 2%, mainly due to a drop in industrial usage by 8%, possibly linked to demand from customers in specific industries. Entergy Texas saw a notable increase in net income of $21.4 million for the first 6 months of 2025. This improvement was thanks to higher prices, higher sales volume, and improved other income, but faced headwinds from increased purchase power costs, higher taxes, and higher interest expense. Specifically for Entergy Texas, purchase power costs are up $20 million in the second quarter due to higher capacity prices from MISO, and they've got a new rider mechanism in Texas to help recover these costs in the future, which is a good strategic move. Entergy Texas is showing solid growth with total retail sales up 4% and a strong 9% increase in industrial sales, indicating a healthy business environment in Texas. Now let's talk about System Energy Resources. Their net income decreased in the second quarter due to lower rates of return on their investments, particularly following settlements with certain regulatory bodies which adjusted their authorized returns and capital structures. This highlights the impact of regulatory decisions on their profitability. System Energy's debt to capital ratio is around 53.7%, showing a reliance on debt, which is fairly standard for this type of entity. Looking at System Energy's cash flow, operating cash flow saw a big increase of $141 million for the first 6 months of 2025, largely due to a refund they received in May 2024 related to a settlement with the APSC, which boosted their cash position. Finally, let's summarize the overall financial snapshot on the balance sheets. Across all these companies, we see significant assets in property, plant, and equipment, like their major power generation facilities and transmission networks. On the liability side, we see a transmission networks. On the liability side, we see a lot of long-term debt reflecting the massive capital investments needed in the utility sector. Entergy Corporation's shareholders' equity shows a healthy increase from roughly $15.1 billion at the end of 2024 to $16.3 billion by the end of June 2025. This growth is fueled by retained earnings and paid-in capital from their stock programs. And let's circle back to the ultimate measure of success, consolidated net income for Entergy Corporation was $472 million in the second quarter of 2025. That's a huge leap from just $51.7 million in the same quarter last year. This really showcases the improved performance. Under part 2, other information, we see some interesting updates and confirmations. No directors or officers adopted new trading plans, which is good for transparency. Now, regarding environmental regulations, the EPA is reconsidering some key rules like those for particulate matter, mercury, and greenhouse gas emissions. Entergy is actively monitoring these changes, noting that some regulatory actions could impact their planned solar and battery projects, and even their carbon emission goals. On the nuclear front, Waterford 3 was placed in a higher oversight column by the NRC due to a maintenance issue, but all other nuclear plants remain in the standard column, which is a positive sign. As for legal matters, there's a new antitrust class action lawsuit that's been filed against Entergy and other nuclear plant operators alleging conspiracies to suppress compensation and exchange wage information. Entergy is currently evaluating this complaint, so it's something to watch. One thing to note on the buyback front, Entergy didn't actually repurchase any shares in the second quarter of 2025, although they did have authority to do so, and they did issue shares to employees for stock-based compensation. So what's the big picture here? Entergy and subsidiaries are showing strong financial improvement this quarter compared to last year, particularly driven by higher industrial sales, increased retail prices, and favourable regulatory outcomes and cost management, despite some increases in expenses like interest and pension costs. The company's overall financial health appears robust. Their large credit facility and ongoing equity programs suggest they are well positioned to fund their significant capital investment plans, which are crucial for meeting future energy demands and environmental goals. The main challenges seem to be managing rising interest expenses, navigating new environmental and tax regulations, and the ongoing legal landscape, but so far they seem to be handling these complexities effectively. Alright, that's our deep dive into Entergy's latest financial report. What are your thoughts on these numbers and what they mean for the company's future? Let us know in the comments below if you found this breakdown helpful. Please give this video a thumbs up. It really helps us out, and subscribe for more corporate financial dissections. Don't forget to join our Discord community linked in the description to keep the conversation going. Thanks for watching, and we'll see you in the next video.